If you were here in 2021, you remember Michael Saylor and MicroStrategy making headlines with massive Bitcoin buys, sending shockwaves through the market. Well, history is repeating itself, but this time the stakes are even higher. Not only is Saylor back at it, but now we got institutional giants behind Bitcoin ETFs and even whispers of the US government making hefty Bitcoin purchases. Are these players the real puppeteers, or are they just facilitators for the world's most elite and powerful people? Stick around to uncover the truth. Let's get it. I'm not a financial advisor. Welcome to BitBoy X. I'm your host, the BitBoy. This is the home of the Bit Squad, the highest IQ investors on the planet. If you're serious about staying ahead in this fast-paced space, make sure to subscribe to the channel and hit that notification bell so you never miss an update. Today, we're diving into the resurgence of Michael Saylor's Bitcoin buying spree, the institutional push behind Bitcoin ETFs, and the potential role of the US government in the unfolding saga. So let's start with Michael Saylor. Back in 2020 and 2021, Saylor, co-founder and executive chairman of MicroStrategy, made huge waves by converting a significant portion of the company's treasury into Bitcoin. This bold move not only boosted MicroStrategy's stock, but also played a pivotal role in driving retail enthusiasm for Bitcoin. Fast forward to today, and Saylor's back at it. Recent reports reveal that MicroStrategy has added a staggering 51,780 BTC to its holdings, worth around $4.6 billion. This brings the company's total stash to approximately 331,000 Bitcoin, making it the largest corporate holder of Bitcoin. Saylor's relentless conviction has solidified MicroStrategy's position as the ultimate Bitcoin maxi institution. But Saylor isn't the only major player making moves. Institutional investors are entering the Bitcoin market like never before. The approval of Bitcoin exchange traded funds, or ETFs, has opened the floodgates for traditional financial institutions to gain exposure. BlackRock's iShares Bitcoin Trust ETF, or IBIT, for example, has seen significant adoption with over 71,000 Bitcoin now held by institutions. Asset managers collectively own around 20% of all US traded spot Bitcoin ETFs, representing over 193,000 BTC, currently valued at a whopping $13 billion. This influx of institutional capital feels similar to the early 2020s, but on a much grander scale. And while it's exciting to see mainstream adoption, it's important though that we look deeper. Who's really benefiting from this institutional frenzy? Now let's address the elephant in the room here, the US government. Reports suggest that the US government holds over 1% of the Bitcoin supply, worth over $13 billion. While their exact intentions remain unclear, these substantial holdings raise questions about their potential influence on market dynamics. Could government intervention shape Bitcoin's future in unexpected ways? Well, here's where things get even more intriguing. While figures like Michael Saylor and institutions like BlackRock are making headlines, they might not be the true orchestrators of these market moves. Instead, I don't know, maybe they could simply be facilitators for the world's most influential elites, those operating behind the scenes to control the financial system. These elites have the power and resources to sway markets, set narratives, and control the flow of capital. The recent surge in Bitcoin interest from institutions and governments could very well be part of a broader strategy. These powerful figures understand how to use institutional fronts to drive retail participation and then cash out at the top, leaving retail investors holding the proverbial bag. Remember, BlackRock and other major institutions will eventually sell their holdings as the cycle matures, using retail exit liquidity to lock in profits. So what does this mean for you? As retail investors, it's crucial to stay informed and critically analyze the forces at play. While institutional involvement brings legitimacy and adoption, it also introduces the risk of market manipulation. Don't get swept up in the hype. Diversify your portfolio. Stay updated with credible sources and always question the narratives you're presented with. One of the best ways to stay ahead is by signing up for our free NWF weekly newsletter, where we give you exclusive insights from Mr. X and help prepare you for what may be to come. You won't find this level of information anywhere else. Link down below in the description or QR code on the screen. So what do you think? Are Michael Saylor and institutional giants the real drivers of this Bitcoin surge, or are they just the frontmen for the world's most powerful elites? Drop your thoughts down below in the comments and let's get the conversation started. Stay vigilant, stay informed, be blessed. BitBoy out.